TP2, TP3, TP4, TP5, all TPs smashed yesterday on gold. Crazy. This is what we do every single day in the VIP group. But just come over here because this is what I wake up and do every morning. The best part of my group is, so you can see 15,000 members, active trading community are coming here, and I just like to see this, right? The feedback. We've got a whole feedback group which displays all the members' results, and this is what I just come here. I just come here and I read all the comments, bam, to trade it perfectly. I made profit. Everything went smooth. And, this is what the one guy said to me. This is really cool and this will resonate. Someone messaged me. If you want to zoom in on this one, I'll just read it out to just prove I'm not bullshitting and it's actually real. Basically what this guy said, yes, I recently earned 557 euros and today is my off day. But just so you understand, 500 euros is a lot for me. Thank you. Of course it's a lot for you. Of course, it's a lot for anyone. Do you understand what 500 euros meant for me 5 years ago? That was my salary for a single month when I was working as a butler for 30 days. This guy made 500 euros in a single day, and you can do the same. Hey guys, today I'm breaking down the exact approach to the market analysis that made me over 6 figures this year. And now I'm going to show you how you can start consistently moving towards the same results. I know what I'm talking about because these are the funds that fund my lifestyle here in Dubai. One of the most expensive cities in the world, the life I only dreamed about a few years ago. I'm going to explain my method for analyzing the markets, what factors I look at, and how I make decisions. And I'll break down specific assets heading into trading this week. By the end of this video, you'll have a step-by-step blueprint on how to consistently profit trading Forex and gold. So watch this video right until the end, and this is where the real value is. Let's get into it. Let's jump behind the charts. I'm going to start with step 1. So step 1 about the gold, let's say the gold strategy, is identifying your time frame. Which time frame do you want to trade off? Can you find a bias of a certain time frame? So I like to go all the way to the top. So the top meaning the monthly. Now for you guys, most of you will see these time frames and you would look at, majority of you would have maybe the monthly, the weekly, the daily. I think you have the 12 hour as well, 4 hour, 1 hour. And then you would have the minutes one. You can add these as well. So if you want to add ones that are on the same as my chart, you can just click this arrow over here, add custom interval, and you can just choose. So now you want 1 minute interval. We already have the 1 minute, for example. If you want to add a 2 minutes, you can add one. So whatever you want to add there, and you can choose minutes. Let me just go back. You can choose minutes, hours, days, weeks, months, and ranges as well. So that's just if you want to add custom intervals like I did on my chart. So let's just break it down. So I start with the monthly. So this one indicates the monthly. So I just look at, okay, cool. Obviously, we just started the new month now. So it's important to look how we react on the monthly. We can see that the previous month's candle did an all-time high on gold. So it's something to pay attention to. We can get a lot of data on the monthly, but the monthly, remember, moves very slow. It makes up 4 weekly candles as well. So, and that breaks it down, loads of 4-hour candles, loads of hourly candles. So, we can get a bias of where the market's heading. We can see that we're starting to reject off these levels based on the monthly. We're closing slightly above. So it just gives us some sort of indication of what's going on in the market, right? So we can see that obviously if we look at gold and we look at the chart, this is bullish, bullish engulfing candle, bullish engulfing candle, bullish engulfing candle. So for me, when I look at this, I'm just looking for, all right, this might have been us grabbing liquidity to the upside. So that's us grabbing liquidity for us to continue to drive down. Now I'm going to get into this as we go. So step 1, identifying the time frame, identifying a bias on a higher time frame. Step 2, what I like to do is break it down now. So I like to go down now on the weekly. So now I'll just go down time frame by time frame and just look for any sort of levels that I can start to draw at. So when I say that's just people start to say, okay, people use the term supply and demand, support and resistance. Now, I like to keep it simple, use support and resistance so that everyone understands that terminology. So when we use support, understand that support is at the bottom, then we find in support, and then resistance, always remember it's like the ceiling. So, you're trying to break through the ceiling. So that's how you can remember support and resistance fairly easy. All right, so we can see that we rejected off these levels, right? So we can already draw our box over here. We can say, this is a level. We can just draw this across. form like that. And we can see that we are forming some sort of range, right? A range means that price is bouncing between, support and resistance, and it's creating a consolidation sort of level. Okay, but before we get into that, I'm not going to draw that just yet because I'm just still talking about the ranges, still step 2, and we go onto the daily. So now we just go on the daily. So I just quickly shift through these time frames. I'm just looking at any sort of, if I find any sort of maybe head and shoulders pattern, any pattern that screams out to me, or I just like to look at, depending on where price is, what it would take for us to get to, say, these levels over here. Would it take a strong wick to the upside? Do we need to grab more liquidity before coming back down? Was this the liquidity that we needed over here? I'm not too convinced. I feel like we still need to come up, but this is what I'm going to get into. So just quickly browse down 4 hour. You can see the 4 hours making structure, and we're pushing to the downside. So we're just trying to identify. We normally take positions on a 1 hour or maybe a 15-minute as well, because these are the most common time frames that we use. So we just break it down. We look at the 1 hour as well. 1 hour can tell you a lot of data. As you can see there. Just remember, as we break it down, remember, like a 4 hour means 4 1 hour candles. So we can get a lot of data from a 4 hour. How's it reacting? If there's a strong bullish move, bearish move, we can take advantage of that as well. And then we can see that if we just have a quick glance, we can see that the price is consolidating. Now, watch the video till the end because I'm going to explain what all these terms mean, right? So now let's go back to, before we get into 15-minute and before we can start looking at positions and where we can start taking it. So now I'm going to move on to step 3. Step 3 is identifying your levels, meaning support and resistance, finding a range and taking advantage of that, right? So something that we saw on the weekly, there's not much data here. We can see that price is rejecting. Now, if we look at price, right, we have a look to the left and we see that when price pushes up, right, it's pushing up, not much bottom wicks being formed, so price, in my opinion, still needs to come down and tap into these levels before making its next high. That's why we're consolidating, and that's why we in between a range and we don't know where price wants to go next. So I still feel like we're going to come up, grab a top wick, and for us to continue going back down. And now what do I mean by that? What does all these terms mean? It means that we need to grab liquidity. There's stop orders, there's buy orders. The market moves in direction where it needs to go before pushing back to certain levels. And it's simple. So if we break it down on the daily, we want to see more sort of price action. What is price exactly doing? Now, if you followed in my group before, the link will be down below, that you can join my group. You can get free chart analysis. I've actually spotted something interesting. Now, let me just identify an easy level of support and resistance over here. So what do I mean by support and resistance? So let me identify the resistance first. You see that price is pushing up. Now, we find a level where price bounced off a few times. We can see that price bounced off these levels multiple times, right? So we obviously understand that this level is a level being respected. Now, where did I pull this from and how did I get there? You can see that price pushed up there, failed to break and close above like it did with this bullish engulfing. Then we obviously had structure to the upside. Then we came back down, but we saw that price tap these levels again, meaning that there's some sort of resistance. The price is strong around these areas. So the price is being respected before we have some sort of breakout. And then where can we identify our level of support, meaning the bottom? So we can identify that our level of support, if we don't look too far left, we can identify a level of support is over here. You see that we're identifying a level of support. So now in between this level, we have a thing called a range. And now how can we take advantage of a range? Well, firstly, I've spotted a pattern. So now that we've identified, so I would say that would be step 3, identifying your support and resistance levels, just making your chart nice and clean, understanding where you're attacking, the markets, where's your levels, where's your range, and how can we take advantage of that. So now we've identified that we're going to trade between these levels, or we're going to wait for a breakout to happen. Now, obviously, this is on a daily. So if we're going to play swing trades, this is going to take a long time to play out. We understand that, hypothetically, if we look at this, if I'm just looking at this eyeballing, I assume that price failed to tap this level. You can see if we just zoom in on this, get zoomed in on this quickly. So we can see the price over here. You see this green wick over here, failed to tap this level. And then started to push again back up. So we came back down, failed to tap this level. Now, my assumption is that we're going to tap this level, and then we're going to make our next move. So either price is going to aggressively push and close above here, and we're going to continue to highs. But my assumption is we're going to tap this level and continue to fill this range to the bottom, because you can see we failed to fill the range in both levels. If you build your level within the range, respect the ranges. Understand that, okay, it hasn't tapped that. Yes, it was, let's say a few pips, let's say we were, about $6, $7 from tapping that, but we understand it didn't tap it. So my strategy is that we still need to tap that before making our decisive decision, right? And we can see that we didn't tap here. Yes, we were $10 below as well. So for some people who trade scalp trades on a 1 minute, on a 5 minute, on a 15 minute, this could be a big move, which we understand, which we'll break it down to. But this, we're talking about a daily. So we're trying to find a buyer still. Now, step 4 is identifying where, if we have a pattern, and I've spotted a pattern over here. So we can identify a price push up here, and this is called a head and shoulders pattern. So it's a very strong pattern. You can see that we pushed up to the upside. So we failed to tap this level of resistance. Now we failed, we came back down, found a level of support, pushed all the way to the upside. So a strong push to the upside, and then we came back down. So we came back down, found a level of, which was here. You can say it's somewhere here to keep our neckline intact. So say we came down today, we want to keep our neckline fairly straight, that's fine. And there's our right shoulder. So you can see it tap back into these levels. Now, when does price, I assume that price is going to push back down here, because this is a bearish head and shoulders pattern, meaning that price failed to break above these levels twice, and now we're going to push to the downside because we failed to close and break above. We touched this left shoulder, which you clearly understand that this is a level being respected, and we've coming back down. So again, what I'm saying is this could be, in essence, this could be your right shoulder that fails and it rejects off this level. You see, we failed, we didn't reject off that level. Now it could be this. This is what I'm saying. We could tap up into this right shoulder and continue the reversal and come down. But my assumption is that we're going to come down to, if we look at the weekly, got to understand that there's levels that we need to break. We understand that here's another level of support down here. So that might be respected before we break down. But my assumption is we could come all the way down to these levels over here. This is where I think we're coming down to. So, but obviously in between, we have a lot of ranges that need to be filled. So obviously this is on the daily, we need to break through that, So just going back a few steps. Well, this is identifying your ranges. So we're understanding that price needs to break between all of these levels, and in between these levels, we have structure. Like we have structure, we have structure, we have structure. Yeah, we don't have too much structure, but we do have a bottom wick, meaning that on a lower time frame, we have some structure being formed. So understand, but before we get to say these levels, we got to go through a few levels, like in terms of on the daily, which can take a very long time to play out, or we might just have one clean candle, one daily that just breaks all these levels and, it doesn't get respected. Because on the weekly, at the end of the day, we just remove this so I don't make too much noise for you guys. You guys can understand. So on the weekly, we've got to understand that, this is all clean traffic, meaning that this is why I've drawn this line over here. This is where I think we're going to come tap next if we push down aggressively. But this is something that we need to pay attention to. That if the weekly is just bearish completely, where can the weekly close down to? Once we tap into these levels, what we're going to see happening is this. Let me just show you quickly. Once we break below here, we're going to see that price is going to start doing something like this and fill these ranges. But until then, we've got a lot of, obviously, price action that we've got to go through. We saw that we had 1, 2, 3, 4, 5, 6 weeks of green candles, but in a month, we can just have 1 month bearish candle to wipe out all these candles on the left. And this is what it goes down to. When you break it down on, let's say, lower time frames, this is the same thing. You'll see that because this is not structure. There's no structure. There's no support and resistance, no supply and demand. There's nothing being formed. We just have green candles to the upside. whatever goes up must come down. We have to find some sort of level. And this is what's happening now on the structure. So we're going to break it down into the 4 hours, see if we can find anything interesting on there. So keeping all our levels, maintaining all our levels, and we understand, okay, great. So we understand that where we are in our charts. So if we look at this, guys, we understand that we're in a level of consolidation, meaning that price doesn't know where it wants to go just yet. So we haven't had some sort of candle that was like this, that aggressively maybe tap that and then push down like one candle to formulate and say, we are bullish, guys. We're going to push down aggressive, be prepared. We haven't found that candle yet. So for now, at any moment, this could just be consolidation, grabbing liquidity, formulating liquidity for us to continue pushing up, closing above there, and for us to continue the structure, tap into these levels over here, and for us to continue driving back up. So at any moment, that could flip. So we're not guaranteed a position yet. But this is why when you break it down, so now we move on to step 5, understanding where to enter and exit a position, right? So for me personally, if I'm going to take, let's say, the position on the 4 hour, what I want to see happen first is us firstly tapping into this level. So completing our range fill. And then if we start closing aggressively down, if we start closing down again, then I would assume, cool, we're going to come down at least the minimum, fill this range. So then you can say to yourself, if you want to tap back into these levels, you can take a position here. This is now calling a position. So if we're going to say, great, we're going to take it on tapping this level, where can our stop loss be? So realistically, this would be, I would say that we shouldn't break above these levels, because once we start breaking above these levels above here, we know at any point we can just fill up and go to all-time highs. So this would give you a nice 1.55 RR. It's nothing too significant, but that's in the long term. Remember, this could take a long time to play out. So I would assume that once we break below here, we're going to close below and we're going to come and tap these levels over here. Now, this is one way of taking a position on, let's say, a 4-hour chart. So this is important to understand that if price had to go up, how high is it going to push? Could we break above here? Yes, price could go like this, tap into here, no problem. Absolutely fine. But that could just be a top wick. And we could close bearish still within this range. And then for us to continue pushing down. So that's why we're protecting ourselves by putting our stop loss slightly higher, that we're not going to put it just above our box, because at any moment they could just take out our positions, because they know realistically that most people will have their stop loss over here. So we want to beat the market and we want to say, let's put it slightly higher. And if price had to push up to these levels, we could take another position, right? So then we could know, okay, great, we could take another position, meaning that if we push, let's say 50% above our initial position, we put our stop loss same spot and we position our trade into 2 trades. Now that moves into a 3.76 R plus your 1.5. That's going to more or less work out to, let's say, a 5 R. So that's how you can position your trade and you can get a better entry and a better exit. So guys, that is my 5-step guide on how to take a position. Firstly, on, building your bias, identifying your ranges, finding your support and resistance or supply and demand, understanding how candles work. If it's a top wick, grabbing liquidity. Don't want to get faked out. You don't want to be that guy that's, exit liquidity. Where the market's saying, I know all of these guys are going to have their stop loss here, so I'm going to beat them here. So that is where you can identify, and this is how you can take advantage of a trade. You don't always have to get the perfect entry every single time. You can position yourself 2 entries and you can get yourself a better risk to reward. So guys, I hope you enjoyed that part of gold, because this will help you understand and make you realize that if you're going to take, let's say you risk $100 on this trade, hypothetically, you maybe risk 50%. Let me just go back here. So maybe you risk $50. You risk $50 at our initial entry. You risk $50 over here. So total risk would still be $100. And then for you to make a $500 on this trade, and this is on a 4 hours, so it adds more confirmation and you're in a better spot overall. So I hope you enjoyed that analysis. And during the rest of the videos, guys, I'm going to be dropping more like insights on lower time frames, because I know you guys like to scalp. I like to use higher time frames, but I also can use lower time frames. But this is just help you identifying ranges. You can use this on any time frame, and it helps you just to build more confidence in the market. All right. I want to talk to you about something important, where your trade matters. I get asked this all the time. Where do you trade? Which broker can I actually trust? Well, my answer never changes. I've been using FX Pro for years now, and that's my recommendation for beginners and pros. Here's why. First, reliability. This isn't some flyby operation. FX Pro has survived in the market since 2006. They've survived every financial crisis, and they're still standing strong. Second, reputation. FX Pro is an official partner for McLaren Formula One racing team. Companies at this level don't associate themselves with sketchy brokers. This is a world-class, trusted operation. What matters most to me? I personally tested their deposits and withdrawals multiple times. Everything works smoothly, no issues, no delays. That's huge when you're dealing with real money. Fourth, trading conditions. FX Pro offers some of the lowest spreads and commissions in the industry. We're talking about spreads from 0 pips on major pairs with competitive commission structures. This means more of your profits stay in your pocket. And here's the best part. I've negotiated a special link just for my subscribers where you get access to the best possible trading conditions with the lowest commissions available. I've put it at the bottom of the description and in the pinned comments. If you're serious about trading, use that link. You've just watched this video and you've gotten a ton of value. But this is just a small piece of what you get in my free Telegram channel. Of course, one video isn't enough to learn on how to trade on your own, but you can get access to my free education, my trades, and my daily analysis. Here's the thing. My goal is not to just give you signals. It's to provide you analytics. It's not just signals, it's fundamental analysis behind every move. I spend multiple hours every single day on the charts, analyzing news, studying the market structure, watching economic data. All of this I provide you for free because I believe traders who understand the why behind every move are the ones who actually make the money in long term, not the ones chasing random signals. So here's what you got to do right now. Number 1, subscribe to this channel and turn on your notifications so that you don't miss the next breakdown. Number 2, hit that like button if this video gave you value. Number 3, drop a comment below. Tell me what you're trading this week, what you learned, or what you want me to cover next. I read every single comment. Number 4, join my free Telegram channel. The link is in the description and the pinned comment. Limited spots are available this week. I'm building something real here, a community of serious traders who want to win. If that's you, I'll see you inside. Thanks for watching, guys, and I'll see you in the next one.